Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight the markets were very whipsawed as the dollar index, which measures the greenback strength against a basket of 6 counterparties, rebounded from 103.75 to 104.10 as all eyes now look towards the US FOMC minutes on Wednesday, with expectations the US Federal Reserve will stick to its hawkish stance in the wake of higher inflation and therefore may find that the hawks on the Federal Reserve will actually look maybe anywhere from a 25 to a 50 base point rate hike in its next meeting in March. However, for the Australian dollar, the market failed to reach its topside objective after posting the Dragonfly Doji around 69.35 to 95 and now buckles back towards the support area, which is seen roughly at 68 figure 35. Do note that a close under 68 cents would negate the Dragonfly Doji and instead reinforce a downside target somewhere around 66.5. Technically, we can see that the RSI midway point was rejected, so that does give further concerns as the MACD slides. We may see a round of bearishness into today's price action, so all eyes on that 68 cents area. Looking at the euro, the market's turned back towards the bottom side of its range, seen around 106.20. In light of the pattern, the market is a little bit concerning that the bullish divergence has now been negated, and instead we could see a break towards this downside. As I mentioned previously, that the dollar index may actually rally on to 106 as initial target and therefore would put further stress on the downside to the euro and look towards the 105 area. The dollar yen is moving closer to its objective of 136 and now as it now claims the 135 area. In light of the pattern, the market is somewhat bullish due to the ADX, a little on the overbought side for the RSI, but overall, in comparison of putting the pattern together, I still feel that 136 is the next contest for the bulls and bears, and let's see how it plays from there. Looking at the market for sterling was a little bit firmer in comparison to how the euro and the Aussie performed, and also with an engulfing candle has turned its attention back towards that top side of 121.30.75 area. In view of the pattern, the market is somewhat bullish in terms of the other markets, and therefore a break above 121.75 would give scope towards 122.5. It's slightly interesting that the dollar has regained along with the pound, but nevertheless the technicals for the last 3 days have supported this current rise, so all eyes on that top side challenge of 121.30 to 121.75. A rejection would put the market back in place to that key area of 119.45. The market is still somewhat heavy when it comes to gold, and I feel that we are looking back towards 1,820 after the hammer failed to get any confirmation, and with the technicals remaining heavy, could see a break of 1,820. That would expose the region of 1,786 to 89. And looking back at oil, pressure is still on the support seen at 75.60.80. Now a break there would give further scope down towards 72.40.60 as initial target, with any upside potential limited while the resistance holds at 79.80.90. Well, that wraps it for the start of the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.